Here's a summary of Visa's Fiscal Third Quarter 2025 earnings call transcript, designed for clear and concise reading. Introduction. Good afternoon, everyone, and welcome to Visa's Fiscal Third Quarter 2025 earnings call. We're here today with CEO Ryan McInerney and CFO Chris Su. Key financial metrics and performance highlights. Revenue. Visa reported net revenue of $10.2 billion, an impressive 14% increase year over year. This beat expectations, driven by lower incentives, a reduced foreign exchange headwind, and strong performance in value-added services. Earnings per share, EPS also saw significant growth, rising 23% year over year. Payment volume. Global payments volume, a key driver, grew 8% year over year in constant dollars. U.S. payment volume increased by 7%, while international volume saw a robust 10% rise. Cross-border volume. Cross-border volume, excluding intra-Europe transactions, showed strength, growing 11% in constant dollars. Processed transactions. Processed transactions increased by 10% year over year. Value-added services, VS. This segment was a standout performer, with revenue growing 26% year over year in constant dollars. This growth was broad-based across all portfolios, including issuing, acceptance, risk and security, and advisory services. Visa Direct. Visa Direct transactions continued their strong trajectory, growing 25% year over year, reaching 3.3 billion transactions. Client engagement. Visa maintained strong client relationships, evidenced by a Net Promoter Score of 76, a tangible sign of client satisfaction. Management's forecasts and outlook. Fourth quarter, Q4, FY25. Net revenue, expected to be in the high single digits to low double digits on a nominal basis, in line with the first half of FY25 nominal net revenue growth, around 10%. Operating expenses, projected to grow in the high single digits to low double digits, in line with revenue. EPS, adjusted EPS growth is expected in the high single digits. Incentives, Q4 is expected to be the peak growth quarter for incentives in FY25 due to lapping prior year one-time benefits and deal timing. Full year FY25 guidance remains unchanged overall, but Visa now expects stronger net revenue and EPS growth than previously anticipated due to year-to-date performance and Q4 guidance. Fiscal year 2026, Visa is confident in future growth, evaluating various economic scenarios and focusing on their three growth engines: consumer payments, commercial and money movement solutions, CMS, and value-added services, VS. More detailed guidance for 2026 will be provided on the next earnings call. Significant risk factors. Macroeconomic impacts. While consumer spending remains resilient, Visa acknowledges it is not immune to broader macroeconomic fluctuations. Currency volatility. Fluctuations in foreign exchange rates continue to be a factor impacting results, though hedging strategies are in place. Deal timing. The timing of client deals and renewals can impact sequential quarter-over-quarter performance, particularly for incentives. Regulatory clarity. The evolving regulatory landscape, particularly around stablecoins, is a factor to monitor. Key innovations and progress. Consumer payments. Continued growth through carded and non-carded solutions. Tokenization is nearing 100% penetration for e-commerce transactions. Flex Credential is gaining traction with new launches and a strong client pipeline. Visa Intelligent Commerce is progressing towards general availability, enabling AI agent transactions. Tap-to-pay penetration continues to rise, with significant advancements in transit usage. Commercial and money movement solutions. CMS strong growth in commercial payments volume and Visa Direct transactions. Vertical-specific solutions for healthcare, travel, and fleet management are expanding. Stablecoins. Visa is actively engaged in the stablecoin space, seeing potential for solving important payment problems in emerging markets and cross-border money movement. They are deploying stablecoin-linked cards and building treasury infrastructure. Value-added services, VS across all 4 portfolios, issuing, acceptance, risk and security, advisory, VS demonstrated robust growth, with notable client wins and expansions. Most important statements from leadership. Ryan McInerney, CEO. This quarter, our financial performance once again demonstrated the power of Visa's diverse business model, global scale, commitment to innovation, and relentless focus on our clients. We are obsessed with serving our clients and wake up every morning thinking about what we can do to help them be successful today and in the future. Visa has become a hyperscaler that enables anyone around the world to access the breadth, scale, and resiliency of our network across more than 200 countries and territories. Anybody that wants to be in the money movement business or the payments business can build on top of the Visa stack. Regarding stablecoins, beyond capital markets use cases, we see product market fit for stablecoins in 2 important areas. 1, in emerging markets where the local fiat currency is volatile and or where consumers do not have easy or affordable access to US dollars. And 2, in cross-border money movement, both B2B payments and consumer remittances. Chris Su, CFO. Visa reached a record $10.2 billion in quarterly net revenue, better than expected, driven by lower incentives, a lower FX headwind, and higher value-added services revenue. Underlying business drivers remain strong. In constant dollars, global payments volume was up 8% year-over-year, and cross-border volume, excluding intra-Europe, was up 11% year-over-year. For Q4, when we take the latest trends for business drivers and volatility, our adjusted net revenue expectations are unchanged in the high single digits to low double digits. It is important to note that when you incorporate our performance year-to-date with our Q4 guidance, even though the full-year guidance ranges are unchanged, we now expect our net revenue growth and EPS growth to be stronger than previously anticipated. In summary, Visa delivered a strong fiscal third quarter with robust revenue and EPS growth, driven by solid underlying business metrics and particularly strong performance in value-added services. Management expressed confidence in continued resilience and growth, despite some moderating sequential growth in Q4 due to lapping prior year benefits and currency stabilization. The company continues to innovate across its growth engines, with significant focus on AI, stablecoins, and expanding its money movement capabilities, positioning itself well for future opportunities.